we are still in an environment where it shows that the energy is outperforming over the week here and at least on charts, from the perspective of outperforming the S&P, even despite this massive rally. And the gold market is outperforming the bond markets. And so we have this move out of the deflationary bust into an inflationary environment. The dollar is weakening. You can see that when you're looking at DXY. The big question that we are asking as we go into the end of this week here is, at this point now we have completed all of our targets. And I'm going to show you, what this is the equivalent to up here at these levels. So we spent, for the most part here, coming out of the end of January, we'll just call it the beginning of February, and we sold off all throughout February and all throughout March. It was about a 60-day period where we were just kind of grinding down, and we had multiple halfway back shorts from highs, multiple full 50% retracements from highs to lows. And it was 30 days ago that we ran into this target, and it was down at 63.53. And so now we're above the 62.50s. We're at 72, now 71. So we've traveled over 900 points in the last 30 days from that target. We came out of those levels inside of traditionals. These traditional long setups were front run by one tick as we were coming out of the 2nd of April. One tick front run. And then we had traditionals leading us into those targets. Then we went to and through profit targets to start extensions. Extensions traded, and they traded coming out of the 12th. They went to and through their profit targets. And then we have been inside of extensions here for the last couple of weeks. And they were front run at 38.2% lines. Now, there were pullbacks from last week, Thursday's lows to highs, that we were also running into earlier this week. But as you can see, both of those targets have now completed. And there's no bearish setups, right? But we don't have any more targets. We've run out of long targets. In fact, both targets were sitting up here, and they both basically were sitting on top of the 72.50s. That was our target for the extension. Now, we've gone through that target, and now there are extensions of extensions that are below us. And we're even giving the indices more room here to pull back into a Thursday's lows to highs, because that's what's inverse of the VIX. But there's something interesting to note here when we're thinking about the euro. And I'm mentioning the euro here because the DXY is not a good barometer of what's really going on in the dollar. It's just a mishmash of a bunch of different currencies. And so it shows this massive sell-off, but that's not a dollar weakness trade. That's a yen strength trade. You can see the euro just sitting right up inside of its original resistance level. And then the dollar yen, has it broken through a short? It has not. It has not pierced through that resistance level. So these markets are inside of shorts together. And so what we're watching for is to make sure that we continue to see a dollar weakness trade. What would that look like? Well, the euro would keep grinding higher. That's what keeps the indices grinding higher here. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.